Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8:50 a.m. Eastern Time on Wednesday, November 18, 2020. So just looking at the level fours to start with. So for the ES, that's from 35.35 basically to 36.80. We're unlikely to see either of those two scenarios play out. So what we can see is basically this market after running up on Monday the 9th, it's just been going sideways, right? Ever since Monday the 9th. It's pretty much been in the range from last Sunday night's gap up, right? We've tested that low from the gap basically one, two, three different times. We haven't tested the high, the all-time high for the ES in the overnight session, right? We've been printing them during the daytime. And really, we've been just sitting here waffling back and forth around this 3606 half level that we've got into, and we'll zoom in, to look at it today. But basically, we've just been, trying to stay above it, flash below it, get back above it, wash it out, right? So trying to wash out that level now. There's really nothing going on. I do still have on my indexes marked these salmon run trades that went off on the end of Monday's session. That range is basically going to be from 36.26 quarter up to 36.31. So that is considered a resistance zone, right? Until it can pass, till the market can prove that it can pass through it. So we'll leave those on here until we can trade through them in the future. So one thing that the market can be getting tired up here, right? We can get some range consolidation, some range contraction, and then tired, and we'll need a pullback to push higher. Everyone and their brother is looking for a pullback, so don't think that when this consolidation breaks, it has to be lower, right? We've tried to go lower, we've hit higher. Eventually, the market will break out of this consolidation range, but until it does, just keep trying to play the range of the consolidation, no matter what you're using for your technical analysis. Expect this range to hold until it doesn't, right? So we're looking at the low end. You're trading against basically those lower levels. So you can see we had another gap up this week, right? So we've tested that gap once so far this week, right? So we had that gap up last week on Sunday, right? We tested it three different times, melted up a little bit higher, but it's really this big bar that we're stuck in from that Sunday night, right? So looking at the bigger term picture, the 1 year to date, and really, I'm still expecting the market, until proven otherwise, right, to trade up near 37.38. So it's either going to go there, and really to break the longer sequences, right? And this is just a profit target. It's not a reversal point by any means. It's just means that's where the market should be going. And then on the downside, you're looking as long as basically 3,084 to 64 doesn't break. There's really nothing going on, right? There's a lot of that's the level you actually need to get to break this sequence higher that ends really this puts in question the bigger bull market, let's say. So otherwise, we're just tracing our way back up to here. We've had that big consolidation, right? We had that failure, the election fears and the COVID fears and the stimulus fears, and right now they're talking about trying to get another stimulus package done possibly this week, because they have to fund the continuing resolution for the government, right? The government will shut down if they don't fund it, so they will get that done. So the odds favor that they're going to throw a little bit of short-term stimulus in there as well. That's going to bridge the gap until probably March 1st would be my guess, at minimum, to see what the next set of Congress and the House, the Senate, and whatever goes on with the White House. Predict it still has by far President-elect Biden taking office, And that's the only thing I'm really gauging. I'm not looking at the news or what any of the pundits are saying. I'm just using where people are putting their money, and I think that's what the market has priced in as well. And the market still has both of those Senate races going to the Republicans at this point in time. A lot can change in the next, 6, 7 weeks on that, and I'll keep watching that as well. But even if both of those Senate races went to the Democrats, their margin is so thin, right? They're not going to be able to pass anything substantial because it only takes, you know, basically one Democrat to flip, and there's very conservative Democrats that are in there, right? Just like all the Republicans, you have it all the way from the Tea Party down. They're not all cloaked the same, no matter how the media wants us to tell it. So, regardless of what goes on in the Senate, one thing's for sure is there's not going to be any sweeping major changes that take place in the next 2 years. So with that said, it's back to business as usual, right? We want some money, we want the stimulus, um, we see the vaccines on the way, and that's really what's priced in. We'll watch the VIX as well coming down, but looking at all the indexes, right? The Russell had this blue box as well, which is right around yesterday's high. It's holding above that blue box for it, right? The rest of these indexes need to follow suit, and it looks like they're wanting to attempt it, right? Every time we come up to these blue boxes and we fail, right, the pullback should end up getting a little bit lower, right, with a failure. So keep that in mind. Getting above it because everyone is looking for that pullback, right? We should start going higher, and technically these blue boxes should hold after we go higher. If they do not, right, you're going to go a little quicker to the downside after that. But don't expect that we're actually going to get a major or significant pullback that's going to take out either, this Sunday's low or last Sunday's low before we end up heading higher. So looking at the NASDAQ at a longer term view, we've got this key level that it keeps flirting with, and you can see that it's above it now, right? That level is going to come in right at 11,927, and you can see that, and these levels for me, right, they're areas that I'm looking for a response, you know, to go down or a response to go up. And you can see, although it's not to the tick, and most support resistance levels on a basic level are not that way, right? But you can see the down action, hitting it, coming down, hitting it, coming down, hitting it, staying up, hitting it, staying up, hitting it, going down, hitting it, staying up. So we're on the other side of that now, right? It looks like it wants to, but we're not really making any progress. We'll get up to that 12,091 basically, and come back down and retested it. So if this retest holds, right, we should go up higher to the next level off of that bounce, and that's going to come up to 12,166 to 12,199. Basically, would be the next levels up for holding this sequence, right? Getting back below there, right? You should come back down to 11,727 and then 11,580 again if this level gets lost. But right now we are just consolidating, right? Until these levels are broken. There's really, not a lot going on. You can look for, entries with tight risk to reward to play it to go up towards the other end and I would take, 3/4 of your position off at least at the end of the range. And if you want to hold a quarter of it to see if you can get a runner out of it, you can. But you you need to stop that runner and don't let it come all the way back in either, because we're unlikely to get anything substantial going anytime soon. Right? We had a nice run up before. So looking at the Russell, and it's time to add some more levels to this chart. Right, you can see clearly support and resistance. Let the market show you where it is. Basically, that's going to come in right around 1748. I'm going to change it to half. and you've got a minor level. I'm not going to put it on here until I see it come in, but basically right around where the swing low is for the overnight session on your chart, right around that 1780 to 81 area of the chart, and responding higher. And it's just like the rest of them, right? They want to test this spike from that Monday session. Looking at the Dow, it's time to add one here as well. And you can see that's right at the overnight low too. That was basically the swing high from the 11th, and we've checked it in the overnight session. So that's going to be critical now, 29,568. So just wrapping this up and looking at it, expect the ranges to hold, right? And again, if we can't pierce these blue boxes and get something going above them, whenever that happens, it might not be today, it might be tomorrow, but every time you get up here, hit your head on it, and you come back down and start making sequences off of that, right? You can hit it, hit it, hit it, hit it, hit it, hit it. That's going to end up being a stronger resistance. So the longer you spend up near resistance, when you push away from it, the deeper the pullback should be before you come back up and try to push through it again. Think of it as a battering ram. If you only have it a few inches from the door and hit it, you're not getting much momentum. So if you can't pierce this resistance, you need to come back down. You need to come a little bit further back away from it to ram through it later on, and you'll probably get a stall point somewhere in that middle, and then pierce over it later, and then that'll become clear support. And that's pretty how much I'm laying that out for you. So I hope this helps. Don't expect anything magical to happen today until it does.